What I want to do is tell you about why you should consider Peninsula as an investment. There's a lot of uranium companies out there to choose from, especially in the boom where uranium is sitting in the feature seat. Peninsula Energy has some great attributes, some unique things. We are a U.S.-focused company. Our assets are in the United States, but we're listed on the Australian Stock Exchange and not on a North American exchange at the moment. So we sit in a different position. We're Guy Keller, I think he said it in the panel, priced extraordinarily cheap. Well, that's a good reason to think about us, but there's a whole lot more. We're not new to the space. Peninsula Energy is a mature uranium company that started its time in the uranium space back in the uranium renaissance period. We're licensed to produce. We have substantial resources. We are well staffed with proven and experienced individuals. These are all attributes that you want to look at when you're considering a uranium investment. We're also a near-term restart production project with an ambition to be back into production at our facility by the end of this year. And finally, we took care of the big piece of the puzzle last year, late last year, early this year. We're funded to production, to first production. So we have a unique story. It's been a little bit underappreciated in the space, but this is your opportunity to tune in, listen to a story that maybe you haven't heard about before because of where we're traded and listed, and because we're kind of a quiet North American company. Again, world-class assets, our uranium production assets located in the state of Wyoming. I'm the CEO of an Australian company. I don't have that accent. I live in Wyoming myself. I have been in the uranium industry in the United States for my entire career, which now spans greater than 35 years. We have a near-term yellowcake production center. I'll tell you about that. We have multiple avenues for growth, favorable market dynamics. We're funded to production. This is our year. This is 2024 for Peninsula Energy is a year I firmly believe we're going to get traction in the market. This is the team with over 200 years of direct uranium production experience on staff, leading the redevelopment and the preparation of the facilities back into production. Very proud of our team. It's exceptionally talented. It's, again, an attribute that's hard to come by. I mean, there's some new companies in the uranium space that are going to do well in exploration and probably some that are going to develop during this upcoming cycle. But this is a team that's done it. It's been there and done that, and that's something you should look for. Corporately, our market cap's around 230 million Australian dollars. We have some options out from our recent capital raise. We're well funded. We put $17 million on the cash position as of the end of last year, but we brought in quite a bit more, and I'll tell you about that on the next slide. We also have no term debt in the company. So in November, like I told you, we addressed the elephant in the room for us was funding to production. We did a 60 million Australian dollar capital raise, which involved 50 million of placement and 10 million of share purchase plan for existing shareholders. All of those proceeds, which is essentially 39 million US, came into the company coffers after the end of last year, where we had 17 million. So we added effectively, $39 million of additional funding into the company, and what that does is it funds us to first production. We also offered a half option with each placement share, an SPP share, and because the company has done so well on the exchange following the placement, we've already seen about 10% of those options exercised. Now they're good. They're a short duration option. They're good until March of next year, but our share price has been very strong post the placement. People respect the fact that we're now funded and we've taken that overhead, that big question out. So we're moving forward at a very good pace. What are we funding? What are we after? This is the Lance projects. This is our flagship area in the state of Wyoming. The Lance projects consist of 3 particular areas. In red, you see the Ross production area or project area. That's where we're fully licensed to produce uranium. We started production at Ross in 2016 or late 2015, so we have a full production license. It's home of our project facilities and our central processing plant. There's an estimated about 6 million pounds of additional resource there. We're going to start operating in one brand new well field and in 2 existing well fields where there's uranium resource remaining. We're going to then move on to a third, or a fourth, and maybe a fifth mine unit in the Ross area before proceeding into sequentially the next area, which is Kendrick. The Kendrick development area holds about 17 million pounds of measured and indicated, primarily resources. And it, again, sequentially next where we'll produce. We have amendment applications in to include the Kendrick into our production licenses, which today are limited to the Ross area. But we expect to have those mid-year this year. That's part of the news flow from this company. That's going to be very exciting, is the addition of Kendrick into the permitting. And then we'll have, you know, a considerable area, really the next 10 years of production spoken for and under the license. The big thing for us, though, looking forward into the future, is the Barber area. The Barber area holds about 32 million pounds of predominantly inferred resources. We don't include the Barber area in our economic forecast because it's heavily weighted into the inferred resource category. But this also is where there's tremendous upside for resource growth and expansion. We can, with additional drilling and closer space drilling, upgrade those resources and upsize the resources, we believe. The project itself, again, the plant and the existing wellfield facilities at Ross were constructed in 2015. This is a very modern in situ recovery facility in the United States. And it was operated from the end of 2015 out to the middle of 2019 when we idled it in the face of a bad market. We recently completed on-site work to transition our chemistry from alkaline in situ recovery to low pH in situ recovery. The low pH in situ recovery is what's done around the world in countries, leading countries like Kazakhstan, where uranium is produced at some of the lowest costs. It's much more effective for us in our ore body, and when we get restarted, we'll be opening up the first commercial low pH in situ recovery facility in the United States. We believe that's going to give us a competitive advantage over time. The current facility is built for producing up to about 0.8 million pounds per year, or 800,000 pounds a year. It's a relatively small facility that was capital efficient when it was built in the middle of a down market 2015. Today, our plans are to expand both the capacity and the capabilities of that plant. That plant was built to produce ion exchange resins, which were loaded with uranium that we shipped off-site. We're building the capacity to produce the final yellow cake product and become an independent producer of uranium. And we're also doubling the capacity. We're taking it up closer to 2 million pounds per year of uranium production, finished yellow cake. And that's really what we're doing this year. That's what we'll do until we get started with production, is a plant construction project. We're not going to produce until the expanded plant is ready. So with that construction, though, now fully funded, it's green light, moving hard and fast towards production over the course of this year. We have engineering firms completing the final designs and procurement. We have a lot of equipment on order now because of lead times. We expect to be able to get everything in. And we're about to break ground on the plant expansion. So quite a bit of news flow on the construction front this year. When we're done, what we'll have is one of the largest uranium production facilities in the United States. We should be able to produce up to 2 million pounds with the facility. The license is actually for 3 million pounds, and we have the ability to expand that plant facility. We're building that into the design so we can go to 3 million pounds with some off-site production, maybe use it as a central processing plant. Again, targeting restart in late 2024. And a steady state production. This is the production profile from our most recent update of the life of mine model. About 1.8 million pounds a year is kind of the steady state production that we should be able to achieve before the end of this decade, with about 1 million pounds of production in 2025 as we ramp up and then continuing going upward. We get positive cash flow out of our operations really quickly. If we start at the beginning of next year, we should be positive cash flow by mid third quarter of next year, so August, September, in a situation where we're positive cash flow. Very robust and exciting project economics for us. And then there's the exploration upside that I told you about. How do we know about inferred resources? We've done wide space drilling, and that helps us, occasionally intercept uranium mineralization, but mainly map trends. We've mapped trends from the north to the south. That's a 37-kilometer by 8-kilometer wide, uranium project area. It's really district scale. A lot more drilling has to be done to bring it into closer spacing and to measured and indicated resource categories. Only when you do closer space drilling can you understand the true sinuosity of the ore body. We tend to map these things rather linearly when you don't have a lot of data. Once you map the sinuosity, you tend to expand the resources. The geologists tell me there's an exploration target on the property of 104 to 163 million additional pounds. So today, the Lance project sit with 54 million pounds and an exploration target of over 100 million, maybe 150 million pounds. This is truly a very significant U.S. uranium asset that's underappreciated and less than fully understood. In addition to that, last year our team, our very experienced team, put a new project on the map for the company. It's called the Dagger Project, and it's just to the northeast of the Lance projects. The Dagger Project is exciting for us. We have an inaugural resource of about 7 million pounds, which brings our corporate total resource over 60 million pounds. It has about twice the grade, a uranium grade of the Lance projects, because it's a slightly different geological context. But what was maybe most exciting is how we did this. We did it very quietly and behind the scenes. We were acquiring mineral rights, staking new mineral claims, looking at research and past drilling results. And we brought this to the company for about the cost of 12 cents a pound in the ground, which is a tremendously cheap. You can't acquire a uranium project for less than a couple of dollars a pound these days, and even then it's not a very good one. So we did this very value accretive for our shareholders, introduced it in October. Timing wasn't great, and the market has not really begun to recognize the talents and capability of the team that we have here, but that's just one indicator. Following, again, I'm not going to spend time on the uranium price. We just had a whole panel doing that. But what you need to know is that Peninsula is a company that does have uranium contracts on our books. We have sales agreements. Our sales agreements are priced structurally so that, a lot of them are base price escalated, but a number of them are also structured with market-related pricing mechanisms. And that's one of the things the panel really didn't recognize, is that a lot of long-term contracts that companies possess today are market-based pricing. So when the spot market goes up, it really is meaningful because the price that you will realize in the future, if the spot market remains up, is significantly higher. Today we have about 1/3 of the production expected from the Ross and Kendrick areas, which is around 15 million pounds. About 1/3 of it committed to sales contracts. So about 5 million pounds are committed to contracts. That means we still have very strong leverage to the upside of the uranium price. And when I prepared this chart last August, the price was sitting around $60, and we imagined 100. Today, the price is over 100, but the 100 is the far right of this chart, and that's, to me, is an amazing reflection of how quickly the uranium prices can move. But we have the protection of contracts. We know where our product is going to go, and we're fully motivated to produce for those contracts because of their pricing mechanisms being both base escalated with prices significantly higher than our anticipated production costs, and market-based pricing mechanisms that are hitting very high levels today. So we have great milestones planned for this year with the initiation of the plant expansion and construction, which is now fully funded. And you'll hear a lot on the progress reports. We have a resource expansion drilling program in the works for both the Lance and the new Dagger project. We have wellfield development activity to make sure that we're prepared for production and have an ample supply of new areas to mine when we're ready to go at the end of the year. Again, remaining funding needed has been secured. We have some additional funding that we may pursue during the course of this year to make sure we can go from first production to the point of sustainable free cash flow, which will be mid-2025 if all goes to plan. And finally, the big thing for Peninsula Energy, the thing that investors should be thinking about, who's the next one in line to start production? It could be us at the end of 2024. This is the year that we're getting ready to commence uranium production. So that's our story. It's a very exciting time for Peninsula Energy, a little bit underappreciated in the market, but a lot of great things going on, and I hope you'll consider us.